Hi, welcome there to my blog trw.stockbrokers.wordpress.com. Today we'll be looking at the first trading day of the market, which I titled Welcome January 2012. We did see a drop in the NSCSI by 59.57 points, but earlier during trading we did see some early morning spikes up to about 0.17%. But we did see some, I wouldn't say profit taking, I'll say more of market corrections. The last day of trading last year, we did see some huge spikes within the Nestle, Guinness, and 7-Up levels. So for now, what they are doing are more of corrections, going back to their normal levels. This we'll need to watch later. Now going to the NSCSI chart for today, we did see some pullback within the double top formation which I talked about, and now the index is trading within its 5-day moving average of about 20,651. I did say the market needs about 54 points more in order to hold on to this level, but on my RSI levels I've already seen a breakout above this level at this place, but the breakout is not strong enough. That's a breakout, and again coupled with the breakout came with what we call a divergence. Divergence means that in terms of pricing, the price went high, came down from the M formation as at the same level, but RSI made that same high, came down and formed a lower high. These are signs of impending pullbacks into, let's say, looking at between this high about 62 points, or the market hits back to about 50 points range. But what you have to know that the market is still bullish, because the last time RSI broke out from these levels, it took about a month plus before it broke out of the 50 RSI. So as long as a market is above 50 RSI, we are still in a bullish position, but this one signifies a form of correction which is likely to happen. If you look at, we're going to NSE 30. NSE 30 has made a new high within the double top formation, while RSI has not. So these are levels we need to watch. Either we see a pullback within this area, or it hits the 939 100-day moving average. But at this level, I expect a pullback within this region back to within the 5-day moving average for it to gather more momentum. That's what we're watching. The banking sector. Banking sector is still above the 5-day moving average, looking good. RSI and the price are moving at the same pace, so that we need to watch. Food, beverage and tobacco. This sector has not only broken the 50-day moving average, it also broke the 5-day moving average, while it's still we might likely see a rebound here at 576. But looking at the RSI is reading but a slight breakout, which we ought to see a rebound within this area. A pullback within this area, we will see more correction into about 560 points. The next one we're looking will be the insurance sector. I did say the insurance sector was trending lower lows and lower highs, so we've seen it now breaking below 5-day moving average and heading towards the next channel, which we'll be watching. Now we'll be looking at today's gainers. MBA was the highest gainer today. It gained 0.6% to close at 503, with a low of 94.42, which it closed at the end of the year 2011. Today's close, it closed above a 50-day moving average, finding good support within these areas. The same support coincides with the support it had since beginning of December within these levels. A good support within this level will take MBL back to, let's say, the 100 mark, but see a possibility of a pullback down to the 19 level. The second huge gain actually was PZ. PZ moved up by 2.1%, and the next resistance level we'll be watching will be within the 29 levels, or the 50%, 29.20. Give or take, resistance are between here and worst case scenario about 30 naira. I did say that in my last report. Next gainer will be Ashaka Cement. After plunging lower lows for some time, we are beginning to see the beginning of a bull rally, but it's still trending below its 10-day moving average. So these areas we need to watch. A breakout above this level will be within the 1184 back to about 1298, but this is likely going to take time. But I see profit taking happening around these levels tomorrow. Going to the losers column, the huge loser today, as I said, was Nestle Food. I did say it's more of correction, not profit taking. Correction in the sense that December period, this stock moved from about 400 naira to about 444, so it's beginning to correct itself. I'm looking at two possibilities of, in a long term, going back to about 400 or 399, because if you look at Nestle shares at the end of the day, how much can they possibly have even paying 40 naira dividend is going to be tough. 40 naira, that's about 10% return on investment, or 20 naira, that'll be about 5%. So yes, it's good, it's a good stock to hold for long term, long, medium and short. But in terms of returns on investment, it's not my style. The next huge loser today was Guinness. Same correction, correcting back to about, let's say, 299, and long term possibly coming down more, because there's already this curve of a sell down. So I think those are things we need to watch. And as I said, tomorrow's market is going to be dicey, either to be a breakout or a rebound. This we need to watch. So happy viewing and good trading. Bye.